Welcome, everybody, to this week's podcast episode for the Financial Freedom Podcast. I'm your host, Dr. Christopher Liu. And as you know, I talk about four different types of freedom: time, financial, location, health freedom. In that light, I'm always interviewing entrepreneurs, investors, people doing things on the cutting edge, sharing those ideas with you and inspiring you. So today we have Chad, and he talks about financial freedom through passive income. He comes from a family of physicians and he's based out of LA, and he's the founder and CEO of CSQ Properties. So he's got a really interesting story from a rocket scientist and now real estate investor and entrepreneur. So today's going to be a great discussion about real estate, investing, passive income. So Chad, welcome.
Sounds good. Thanks for having me on the show. I appreciate it.
I know we met through this really interesting platform called Podmatch, and tell us more about your story. You have a lot of interesting stories from a family of doctors and how you got started.
Sure. So yeah, I guess we could go way back, talk about the family of doctors. So yeah, my grandpa was a general physician. My dad is a practicing ophthalmologist now, and or still, I should say. And yeah, an interesting fact about me, my grandfather actually delivered me in a hospital that he helped found. So that was way back in the 1950s. I wasn't born in the 50s, but he founded the hospital in the 50s, and then wound up delivering me there, Northridge Hospital. Most people are familiar with the city of Northridge because of the earthquake, and yeah, that's where the hospital was founded. So I'm actually a structural engineer, general contractor by background. Come from a family of techie folks. With my siblings are doctors and engineers. And so yeah, I started out at Rocketdyne working on the space shuttle main engine, structural dynamics on the turbo machinery or turbo pumps for the space shuttle engine. So technically a rocket scientist, but I was always an entrepreneur at heart. And so I left that and went and worked with my brother on a lighting company, which we grew in scale. And then he took over, and then I went back into real estate full time. This was in 2018. And I've been in real estate since. And I was in construction for quite a while and engineering. So I had a background in real estate, but never as an investor. And I know you know this, but maybe for some of your newer listeners, like that's really where it's at, right? Real estate, you get the tax benefits, you get the leverage, and it's a great way to grow passive income. And that's what we do now.
Yeah, it's quite interesting. We have living in very interesting times, and one thing is particularly with real estate, it sounds like that you've always had that in your back pocket as an investment and can always go to it. And how does real estate play a vital role in achieving freedom?
Well, I mean, I think there's lots of investments that you can make, but I think there's very few, if any, that have all the benefits of real estate, right? And what I'm referring to is the tax advantages that real estate has, the ease of leverage, meaning you can put a certain amount of money down and get a debt to try to acquire a bigger asset, and then you get all the upside of that asset. The bank doesn't get that. And then something that's super stable and very risk adjusted, or very good risk adjusted returns. Real estate's been around forever, and over time it's done very well. And as the saying goes, it's the best get rich slowly scheme out there, right? You tend to be asset rich and cash poor for a while because you just keep putting it into real estate. But over time, your portfolio grows. And if you do it right, your passive income grows, your cash flow grows, and it's a great investment. And the government encourages you through different tax incentives to stay in real estate, to invest in real estate, such as writing off the interest expense, doing a 1031 exchange into new properties, so you don't need to pay any capital gains on any of your gains, or taxes on any of your gains either. And you can just keep rolling it into larger property. So it's a really great risk adjusted investment.
Yeah. And then what's interesting is that so much of media, mainstream society, they focus on financial freedom, but you intentionally focus on freedom. What is that, and why is that?
Yeah, for me, it's very different, right? And you're right. Most people focus on financial freedom, and I really like your four pillars that you spoke of earlier. And health freedom was one of yours. And it's interesting because there's a lot of people that are very well off financially, but they don't have their freedom. Maybe they could be business owners in LA where they shut down businesses and you weren't allowed to operate your business. Or you could even be like, Jack Ma, one of the, most richest men in the world, who disappeared for 2 years because he was, arguably saying the wrong things, and he disappeared. No one really knows what happens even to this day. So, and that speaks to like freedom within your country or from government. Medical freedom is another big one, right? If you want to do with your body as you wish, instead of the government telling you what to do. All these freedoms, I think, a lot of people take for granted. Some people have them, some don't, right? But I think people in America take it for granted. And for me, I focus on those types of freedoms. I mean, I have this right over my right shoulder, right? It's Let Freedom Ring. It's a big picture of it's actually a metal art sculpture of an American flag with an eagle, for those of you listening. And it says "Let Freedom Ring" underneath. So for me, it's a lot more than just financial freedom. And certainly financial freedom can be a piece of that puzzle, but there's a lot of people with a lot of money that don't have freedoms. And for me, that's all for nothing if that's where you end up.
Yeah, I think right now we're in this age where, it's information, and when we were living in the industrial age, freedom was having financial freedom. So one thing I have a question is, you mentioned all the positives and advantages of real estate. For people listening to this, what advice or what ideas would you have for people getting into it, starting a new real estate business, and talk about that?
Well, I think that's one of the things that's really great about real estate is you can invest on the side if you'd like. You don't need to know everything about real estate, and that's what's particularly exciting about I think a style of investing that's gotten a lot more popular the last several years is what's called syndications. And it's basically investors that are pooling their money together to buy a larger asset. An asset that might normally only be available to institutional type money, where you can get great risk adjusted returns and not have as much volatility as you might in a smaller asset. So through those syndications, you're able to put some money to work. Usually, $50K to $100K, somewhere around there is typically the minimum, and then you own a piece of a really big asset. And that's a great way to do it. So as what they call limited partners or a limited investor, and you could still be doing your normal day job. You could be a physician, whatever it is, and then invest passively in a deal. Now, it's really important that you trust the team that you're investing with, because they're the ones that are kind of in charge of the investment. So they've got to make, you want to be with someone who's got some experience, someone who you know, like, and trust. But you can put some money into it and kind of track the deal and see how it goes, and really start to learn that way. And it costs you, an investment of $75,000 or whatever it might be. But when your money is in the game, you pay attention and you learn. And I know a lot of physicians learn by doing, right? That's the whole idea of residency, right? It's where you really sharpen your tools, so to speak. And you learn by doing, and you learn by watching. And it's ironically very similar in real estate. So if you put money in a deal, you would also be learning by watching someone else and following the decisions that they make on the asset. And then eventually you could learn by doing and doing your own deals if that's something you wish. Most high income earners, they're happy being passive. They can really focus on their day job and their passion, really focus on that and not get distracted by some of this other stuff, because it really is a full-time job, right? It's There's a ton to learn. People do lose money, so you got to be careful of that. And so investing passively allows kind of the best of both worlds for those that really like their day job or like what they do, but still understand that it's better to have multiple streams of income instead of just one.
Yeah. Yeah. It's and the beauty of, real estate is, you have a product and you have a service altogether. And so, you don't have to invent something, it's already there. You just have to acquire the asset and know how to manage it. And one question that's frequently asked in these particular times is how does inflation and interest rates affect real estate, and where do you think the state of the market is?
Yeah, so it's a good question because we are in a really kind of unique dynamic time right now. Traditionally, when interest rates increase, your debt gets more expensive. So the price of the asset would come down to accommodate for that or to account for that. And we've seen a little bit of that happening, but not nearly as much as you'd expect, considering interest rates have gone up faster in the last 8 months than they have ever in history. They've literally doubled, which usually doesn't happen, and it has never happened before. Usually, interest rates and real estate tends to move pretty slowly. It's a slow moving asset class. It's not like cryptocurrency or Bitcoin. I know you know that world really well, and I'm sure you've spoken a lot about that as of late. But it moves very slowly. And so despite that, we're in a much different time right now because you have opposing forces that are creating the pricing that we're seeing in the market. So what I mean by that is, like I said, traditionally interest rates would go up, cost of debt goes up, and the price comes down. That's not happening right now. It's happening very little bit, but not as much as how high interest rates have gone up. And the reason for that is because of two things. One, we have really high inflation, which is causing the rents to continue to rise. And I'm speaking of commercial real estate. That's all I know is commercial real estate. So the pricing for commercial real estate is directly proportional to the amount of income that the property produces. That's how you decide what the price is. It's not like on the residential side where you look at sales comps and you say, okay, what did this house down the street sell for? What did this other house that was kind of similar, what did that sell for? And then you come up with an idea of sales comps or comparables to figure out what your house would sell for. Like that's the residential world. The commercial world is totally different. And commercial being anything 5 units and above is how most people define it as. And that depends on how much income the property is generating. So if your rents are going up because of inflation, then the property is producing more income, and that's making it more valuable. So those two very opposing forces. And the third big one would also be inventory. And this one's kind of tied to the 2008 global financial crisis, which I know you're really familiar with, Dr. Lou, and I've heard you speak on that one. We slowed down the amount of construction we did ever since 2008. And we actually didn't get back up to our 40-year average of new housing units up until just a couple of years ago. So we had at least 10 years of depressed building where we weren't bringing on as many units as we had in the past. So we were undersupplied through that time frame. And now you compound that with supply chain issues and construction costs, and housing builds are down again. And it's the wrong time for the US to be building less because everything is so expensive. So I think overall, considering all these different factors, I think overall the pricing is going to continue to creep up, although not as fast as it had the last several years. But we have a lot of upward pricing on pressure, and I think it's still a great time to be investing in real estate.
Yeah, it's very depending on who you talk to, there's like you were talking about, there's so many moving parts. There's inflation, interest rates, there's the macro policy, which is going to be really interesting. And what's interesting is, as we come to the conclusion, you've had a very diverse career path. You're on real estate, and then we have 5 kids now. How do you balance work and family and still run a successful business?
That's a tough one. That one I would say is a work in progress. And anyone who started a business, they know it's always tough in the beginning. There's a lot of self-sacrifice that you need to make to kind of pursue your passions. Now, I've been an entrepreneur my whole life. I've worked with and started 6 different businesses, and my last one being CSQ Properties. I started in 2018. So, and it's still very much a growing business. I'm still building out my people team, my infrastructure, and frankly, just putting in a lot of time, a lot of burning the midnight oil, a lot of elbow grease. And I'll tell you, it's a lot different starting and building a business in your 40s with several kids than it is in your 20s and 30s when it's just you. That's like the biggest difference, and it's a big challenge. I have to sacrifice a lot of my family time. What's great about building a business, and even more specifically real estate, is everything that I do today will continue to pay dividends tomorrow. And for me, that's very motivating. I know that I'm not going to always have to be doing this. Like, I'm very far from financial freedom. I'm very, very far from that still. But I know that every asset I buy and that I roll that into something bigger later on, and I'm doing value add deals, which basically means fixing them up and holding on to them for passive income in my case. But I'm creating value in the marketplace, and we get paid for creating value. But what's nice about real estate is that will continue to pay dividends later. And even like as let's say a physician starting your own practice, a lot of times the real estate that you own is worth more than the practice that you built. And I know I've seen that with my dad. I've seen that with several of my entrepreneurial friends that the real estate winds up being worth more than the business. And I think it's very important to keep an eye on that message and realize that there's a reason why real estate over time does really well. And people that bought the property that they're in with the business just paid for the debt servicing and paid for the operations of running that real estate. But that was the asset at the end. So you can actually shortcut that. And you don't have to start a business to buy the property. You know what I mean? You can syndicate and get into these deals and own property, and over time end up doing well. But in the meantime, like for me, to go back to your original question, I'm making a lot of sacrifices right now. But it helps knowing that it's all for things in the future.
Yeah. And the beauty of it is like all the upfront work, and then like you said, is paying dividends, and it's a recurring residual. And then plus you have, a very profitable business. So very interesting conversation. I really love, like real estate is very bread and butter, and to talk to people that are successful in it. How do people follow you on social media, contact you? And I know you have a free ebook that you give to listeners.
Yeah. So best way is csqproperties.com, or Instagram, YouTube, LinkedIn is all CSQ Properties. But yeah, for me, like my avatar, the people that I'm trying to help, I know you work a lot with physicians. I work with entrepreneurs. So I created an ebook on why entrepreneurs should own apartment buildings. And they're a unique breed in of themselves. And so I put together the top 7 things on why it's good for entrepreneurs to be investing in apartments. And that's kind of like my background. That's what I started from. I wish that I had read an ebook like this when I was still running my business and I had a lot of cash flow and could have been doing investing way back when. So that's what I put together as a download you could get at my website, csqproperties.com.
Yeah. And for all the listeners out there, thanks for tuning in. Chad's resources will be in the links and show notes. Be sure to follow him on LinkedIn, Instagram, YouTube, Facebook. And with that, thanks so much for a really insightful conversation, and thanks for coming onto the podcast.
Thank you.